Have you ever wondered where the problems in the world today would exist if we had deeper connection to ourselves, others, and the environment and acted from that place? Welcome to the Conscious Action Podcast with your host, Brian Berneman, who believe that connection is the key to taking conscious action as individuals and creating a better world. We are here to raise awareness and inspire meaningful action by sharing stories, knowledge, and conversations with thought leaders and change makers. From sustainability to well-being and everything related to conscious living, our mission is to empower you to be the change that you want to see in the world. Welcome everyone to a new episode of the Conscious Action Podcast. I am Brian Berneman, your host, and I have the pleasure to be joined by Victoria Harris from The Curve. Thank you so much, Vic, for taking the time to be here and sharing this conversation with me. So for everyone that is listening and watching to us, what can you share about yourself?
Hi, Brian. Thanks for having me. It's always nice to jump on someone else's podcast instead of our own. So so thanks for having me. Like you said, my name's Vic. I am co-founder of The Curve, which is a financial education platform to teach women or anyone that's been left out of the conversation about finance, investing, money, everything like that. So we started about 2 years ago now, just because I guess a bit of my background is that I born and bred in Auckland in New Zealand, and went to school here, then went on to university to study finance, and then have been in the finance industry for about, getting older now, about 13 years. And about, throughout that time, I'd really noticed like a lot of my friends coming up to me and being like, "Hey, Vic, I don't understand this stuff, to do with money and investing. It's so confusing. Or can I sit down with you over a wine, just have a chat about, I've got some savings now and I know I can be doing more with them, but it's so overwhelming and confusing." And I was like, "Yeah, sure, happy to help out my friends." And then I thought it was kind of a light bulb moment. And I was like, hang on a sec, there must be so many women out there that don't have someone like myself that they know that they can go to. And so we set up The Curve as a place for anyone to go to learn and to start that journey about growing their wealth and growing their money. And it's just gone absolute bananas and gone from strength to strength. And I do it with a friend of mine, Sophie, and her background is kind of in TV and radio and content creation. So we kind of bring my finance brain and her creative brain together to make finance and investing fun and interesting, and really kind of flip it on its head from what it is today in terms of boring, dull, and really overwhelming. So we've just seen things go from strength to strength over the last couple of years, and now we both do it full time. And it's our baby that we kind of want to see grow and prosper and reach as many people as possible globally is kind of the strategy.
Beautiful. Thank you for sharing that. I think that it's so interesting always, and this is one of the reasons why I love doing the podcast and I love having conversations and learning about like people's journeys and their stories, because they help us understand a little bit more, all of this. And I think that, and this is one of the reasons why when I reached out to talk, it was, there's been for such a long time, such a disparity in terms of who is able to actually earn money, who's actually being able to get the education and have that wealth. And there's so much inequality, and to be able to create a space, as you're saying, that it's not just your friends, it's like the larger population, especially of women. I mean, I think that financially, most people don't have a good financial education, men and women, but especially women. And I think that from that perspective is something that I wanted to explore about both your journey and what have you been seeing from all of the women that you've been working in terms of being more able to actually be comfortable and to actually get into what I would call their own power and not just being a victim of the circumstances.
Yeah, and I think that the victim of the circumstances kind of comes back to, history where if we just look at gender specifically, like men were historically the breadwinners of the household income. They went off to work and therefore they earned the money. They understood how money operated, how to grow their wealth. They were investing it. And it's not until more recent history that women have been more equal participants in the workforce, therefore have earned their own money. Therefore, they need to learn, how to take care of that money and grow that money, and be a lot more independent. And I think that was it wasn't until we started the curve that we started to uncover, why these different levels of financial literacy across gender have occurred. And, we're not going to change it overnight. It's just going to take generations and decades to change. But yeah, the more barriers that we can break down in terms of, I don't want to learn this stuff because it's too confusing, or I don't want to learn this stuff because I don't know where to start. If we can peel back those barriers and create a safe place where anyone can start learning this, and giving them the tools and the knowledge to learn themselves, it's kind of up to them if they want to learn or not. And there will be people that don't want to learn or aren't interested. That's absolutely fine. But if we can, create that place or that space for those to learn that want to, then that's kind of the whole ethos of the curve. And we started out targeting probably 25 to 45-year-old women, just because that's naturally at the age that we're at. And so we resonate with those particular women. And we have found that we have since, heard from women who are, as young as teenagers, preteens, to we had an event where a 90-year-old lady came along to learn about investing. So we've really just broadened the spectrum. And it's, there's so many different reasons of why they want to learn this. And it's, sometimes I don't want my daughters or my children to be, to feel how I'm feeling in terms of feeling overwhelmed or not being financially secure. So I want them to come on and learn with me. So therefore they're bringing in the younger demographic. And then we've got women whose marriages or relationships may have ended, and they haven't had to learn this because their partner has taken care of it. And now they're having to learn, or their partner has passed away and they realize they may have inherited, or realize they have to actually earn, to survive now. And so there's so many different stories. And one thing we've definitely noticed is everyone's relationship with money, spending habits, experience is so different. And that's why we've kind of created so many different ways of learning, because you might learn through audio, you might learn through video, you might learn through written, all that kind of stuff plays into, breaking down those barriers to provide, as many women as possible the opportunity, having the opportunity to learn this, if they want. And yes, there's so many other, the financial literacy gap happens. It's not just gender based, it's ethnicity based, it's age based. There's so many different reasons in society why, different ethnic groups or different cultures, or it might have different levels of financial literacy. But for us, we can't focus on trying to solve everything. So we've decided to focus on the gender imbalance and focus on that. And yeah, hopefully, I'd love to see some change. I mean, we get messages all the time from women that are like, thank you so much, Vic. I've now learned that if I change my Kiwi saver, I'm going to be this much better off. Or thank you so much. Me and my daughter are doing your online course together, and now she's interested in investing at such a young age. And when you hear stories like that, it's just like, that's what gets you out of bed in the morning to keep going. Even if you've had a really terrible day, it's like when you get messages like that you're literally, and it sounds cliche, but you're literally changing people's lives. Like, I searched, throughout my entire career for what was my passion, what is it that I want to do with the rest of my life. And I was getting into my 30s saying, oh gosh, I haven't figured that out yet. And I'm just so glad that the curve is that, and it's bringing my experience and my willingness to educate other people, bringing that all together so that finance and investing isn't like an exclusive club that only wealthy people or only smart people, or it's everyone can learn this. And so getting messages like that is just super, super humbling, and kind of the reason that we want to reach more and more women so that everyone has that opportunity.
So beautiful.
Sorry, long-winded answer.
Oh, that's great. I feel a lot of times the same with my own life and my work. It's seeing the changes and the transformation in people. That's why I do what I do, and it's so beautiful a lot of times to be able to receive that feedback, because we are doing all of these things and we have no idea sometimes if we don't get the feedback.
And it gives it purpose. When you get messages like that, you're like, okay, there's actually a meaning to what I'm doing, or there's actually a reason I'm doing what I'm doing, and to help other people. And it's like, it's an amazing feeling when you finally find that sense of purpose, I guess.
I want to go back to something that you said. You mentioned the word secure, and I feel a lot of times, in society, most people don't really feel safe. Women don't feel safe. I mean, for a lot of reasons, but talking about this financial literacy, what has been in your experience, at least, a difference of being able to get to a place that women feel secure and confident in, like, okay, I know this, perhaps yet they don't know about investing or other things, but it's like, I got the minimum that I need to feel safe and secure. As you were sharing, I know, like, growing up, a few of my parents' friends, when they got divorced, the women ended up with nothing. And it was, kind of like, as you were saying, they started from scratch, as they are, like, quite in the 40s, 50s or something like that. And it's like, oh, what do I do? So what has been in your experience that piece that allows some to actually feel a little bit more safe?
It's a really, really good question. And I think it's, for women in particular, like when you're talking about money, or you're talking about wanting to grow your money, there's a sense of shame, or like a sense of like kind of greed that comes with, like, I want to earn more, I want to save more, I want to invest more. And it's like, whenever you're talking about money, it's like this sense of greed. And it's like, we're trying to change that narrative of, like, there's nothing shameful with wanting to have a financially secure future, to have that financial freedom, or, to want more. Like, why can't women want more? Why can't anyone want more? And I think it's interesting what you said. I think with women in particular, money brings power and control. And if you don't have money, or you don't have your own kind of safety net, then you can really lose that freedom, you can lose that flexibility, you can lose that choice. And I'm not talking, from anything from if you're in an abusive relationship and you don't have any safety net or any money to leave that. If you're in a shitty job and you don't have any savings to leave and go find another one, like, there's so many different situations where money creates that freedom. And so, and I'm not meaning millions and millions of dollars. We talk about having an emergency fund, or I don't know if I can swear on the podcast, but like a fuck you fund. And it is pretty much like a it's like an if you to my job, if you to a relationship, like if you to a shitty house that I have to live in, or a shitty location, or anything. Having that kind of emergency fund, if something goes wrong, or using it to get out of a shitty situation, is so key for anyone, really. And so we kind of start, like, yes, you might not have enough money to invest, but we say kind of the first step around investing or growing your wealth is having that emergency fund. And that can be anywhere from kind of 1 to 3 months salary. And you build that up over time. And then on top of that, that's when you start to invest. And, because a lot of people are like, oh, investing's scary, I'm going to lose all my money. And so having that safety net as well then gives you a bit more confidence, or ability to take that risk with the leftover money. So, but in terms of living your life, yes, I think having an emergency fund and having that backup amount of money should anything go wrong in your life it might be something tiny, like you pop a tire. If you're living paycheck to paycheck and you don't have any emergency funds, then that can really spiral you into kind of a lot of financial stress. So it's really having that safety net, emergency fund, whatever you want to call it, so that you can, live the life that you want, or at least, have choice to live your life how you want. But yeah, I mean, we spoke this before around, we have a lot of divorcee women or widows, they're having to learn this stuff very quickly. And that situation in itself is stressful enough. If you're going through a divorce or you've just lost your partner, or, for example, then that is so stressful in itself. You don't want the added stress of, oh my gosh, I don't even have any money myself, or I don't even know how to manage money or manage it correctly or grow it, or so having that, building up that knowledge now, should anything like that happen in the future, you'll be way less stressed and way more kind of financially prepared, because life is so unpredictable and there's so many things that can come left field that you don't expect. So the more you can start now, and you might have the mentality, it's not going to happen to me, but hey, if it doesn't happen to you, you've got a little safety net of money that you can deal with how you please down the track. But there's no harm in having that money on the side should anything happen. And I've got friends that are in terrible relationships, or have kids and they're in bad relationships, and they don't know the first thing about managing their money, and it's really sad to see. And or friends that want to leave their jobs and can't, because the thought of taking a couple months off to find a new job, or it's just, money does give you freedom, and that's why it shouldn't be shameful to want money, or want to have a pool of money, to have that freedom and have that security and financial stability.
Yeah, as you're saying that, I go back to, because I work with a lot of women as well, in their overall well-being. And one of the biggest things is they need to feel safe and secure enough with their money. That's part of it. If that's not there, the stress level on other things will start to add up. And I think that it's so interesting, the fact that, like the beliefs as well of, as you were saying, how can we change the beliefs to understand, money, as you're saying, I grew up with a lot of people around, like money is evil and money is this, and as you were saying, that greed. And instead of, well, like, money is safety, money is security, money is like self-regulation, because I am not going to be all the time in that place. And for so many, it's about opportunities, as you're saying, like, a lot of my clients are super unhappy at work, and there's no way out, in a sense, because there's no safety net, there's no way of actually making that happen, or unless they feel secure enough that whatever they are going to do is going to give them something quick enough that it's okay to actually go through that moment. But as well, I think that a lot of times for me, the beliefs and the way that we actually understand how our money works, what's its place in our life. I grew up with an understanding, for example, from my parents, that they wanted to travel like every single year, family holidays. So, it's kind of like there's money set up for that. So that was priority. And I do the same, it's like, okay, I need every year to make sure that I have enough to go and visit my family. Okay, that's done. Then it's like, okay, then I know how much I can spend on a daily basis. And most people that I know actually have no idea how much money they are spending.
Yeah.
It's it's a really interesting thing. And there's no understanding on what's priority as well. Like, why do they do the things that they do? Why are they working all of the time and making this money? So would you be able to talk about some of those beliefs and some of those habits that you see that are perhaps in the way for having that security and that wealth and that freedom?
Yeah, it's funny you say that. Your parents' mentality of prioritizing holidays and everything. It's interesting how much our parents' relationship with money, or how they spoke about money or dealt with money, really, resonates or sets us up and creates how we feel about money as their children. So it's, you might have been in, your parents might have never spoken about money, and when they did, it caused arguments. And so therefore you have this real aversion to ever talking about money in your relationship, because you've seen what it's caused with your parents. And so there's so many facets of how our parents dealt with money that resonates with us. You might have had a really frugal upbringing, and therefore you're really frugal with money, or you've gone the complete opposite because you hated that frugality. So it's like, it's interesting how much our parents play part in our kind of money story and our values of money. But yeah, I mean, there's so many people that are terrible with money as well, and don't know how much you're spending on what. And we always say, like, you can't monitor what you're not measuring. And so if you're measuring, what you're spending is, then you can monitor, oh gosh, I'm actually spending a lot more than I thought eating out, or I'm actually spending a lot more than I thought on clothes or holidays. Maybe I can cut back on that. But the other thing is also, when we talk about budgets, everyone's like, oh gosh, like that sounds like, a financial diet, and like it sounds horrible, and I'm not gonna be able to live the life that I want. And I think we're trying to really reverse that psychology and that thinking when it comes to budgeting. Is like, no, it lets you spend money on things that you really enjoy and cut back on the things that you don't enjoy or that don't bring you happiness or that will, create value in your life. And so part of that is also having kind of a money journal, a money diary, and writing down during your day, what are you spending money on, and how did you feel when you spent that money? If you're buying a dress, or you're going shopping, or you're buying some shoes or something, and then you'll instantly feel like, oh my gosh, like I shouldn't have done that, or I feel really guilty. Then maybe it's recognizing that emotion, and next time that happens, maybe trying not to do that, or cutting back on that spending because it doesn't bring you joy, it doesn't bring you happiness, doesn't create value to your life. So whereas if, like you said, if your parents, family holidays were a priority for them, and it's like, okay, if holidays with my friends, or if spending money on fitness, like gym membership, Pilates, yoga, whatever, makes me feel really good about myself and brings value to my life, then I'm going to prioritize that and cut back on other areas. So it's actually creating more, money it's kind of reallocating, I guess, and cutting back on things that you don't actually enjoy spending money on, but realizing and taking a kind of a self-check to figure that out, because it's if you're not kind of monitoring it, then you don't actually know. So it's fascinating when you start doing budgets and you realize, those little small amounts, if it's like a coffee every day, or if it's snacks from the dairy or something, and they kind of add up, or lunch every day, if you're buying lunch out, how much that can add up over a month or over a year, is quite eye-opening and quite amazing. So it's kind of making sure that you are monitoring your spending and prioritizing on what brings you value and what's actually going to benefit you, rather than make you feel worse. So,
there's the whole emotional side of things, of how we are spending with money, and as you're saying, those beliefs of how we grew up and what we learned and what we saw and experienced. And I grew up it was interesting for me growing up, because I grew up with a family that I felt like there was a lot of abundance and a lot of money, and at the same time there were a lot of things that it's like, like let's not spend on that. And it's like, and later on I understood, well, it wasn't because of being tight with money, it was about making sure that the things that we wanted to do, that they were there. And all of this, transpires then to how I think of money. And luckily I've been able to work a lot on this for myself, but that emotional responses are so big. And
my money story, like my parents, my mum and dad both work, and I think that mentality of also seeing my mother work and having to be an equal provider of the household income, and also the mentality that we had money, but it was like, if you wanted to go and do some kind of activity or something that wasn't day to day, or if you wanted to go to the movies with friends, or if you wanted to buy buy clothes, then that you had to work for that money. So I remember getting my first job when I was 11 because I was like, I wanted to go out and I wanted to have that independence. And that's definitely, stayed with me for the rest of my life. It's like, if you want to go and achieve something, or you want that independence, then you're going to have to work hard to get that money and go and achieve that. And so it's not until, the last couple of years of actually sitting down and realizing, wow, that's come from my parents, and that's come at me from a young age of, I also had an older sister who, was 3 years older than me. She was out, doing, having fun with friends and stuff. And I wanted that, but it's because she had a job. And so I got a job. And so it was kind of having that, money brings you freedom. Money brings you choice. I could go to the movies with my friends because I had my own earnings and my own money from a job. So it's kind of, it was, gosh, I can't, the poor person who hired me when I was 11, though, I wouldn't have been that good, but yeah. But,
Oh, that's good. Because I want to go what you just mentioned about the working hard versus allowing money to actually create wealth, and that is, a lot of times the investment part. What are some of the myths that you see in that space, in terms of investing, in terms of, like who can invest, how much can you invest? This is super difficult, in your experience.
Yeah, so I guess the first one is that you need a lot of money to invest, and that used to be the case. And so then it was just a creation of, the richer get richer, which is so good now that anyone can invest. There's great platforms around like Sharesies and Hatch now where you can literally, if you have $1, you can invest. So, if you're putting in $1 a week, that is fantastic. It's amazing. If you might have been investing $50 a week and now things are feeling a bit tough and you're like, oh gosh, I actually need to cut that down. Like, that's fine. You can cut that down to $10 a week. It's kind of, they've really opened up investing for everyone, which is great because it's also not only letting anyone invest, it's opening the conversation to everyone. Those conversations were only had with the people that had a lot of money because they were the ones investing. Whereas now, everyone has the ability or the access to investing. So therefore, everyone's kind of much more people are talking about investing, which is education and improving their knowledge, which is absolutely fantastic. So that's definitely one of the kind of misconceptions. I guess the other one is that investing is gambling, which, so if my business partner was like, this roughs me up so much, because when you're investing, you are investing, you're putting your money, you're giving your money or investing in an asset that you expect to grow over time, whether that's you're buying a share in a company with the expectation that company will grow over time and you'll get that return back on your investment. If you're investing in property, you're buying an asset that you hope will increase over time. So you're putting money into society or into the community to help grow and prosper. And therefore, you're growing your wealth as well, and you are effectively growing and prospering in terms of your return on investment. Whereas gambling, it's like very much a drain on society. It's addictive. Like, there's just so many elements to it in terms of how it is not investing. And investing, you're researching, you're making an active decision to give someone your money or something your money to help grow and prosper. So you are doing research into that. You're not just picking black or red on and gambling. So but if you aren't doing your research, then 100% you're literally throwing darts to the dartboard and hoping that something will do well. Then there is an element of gambling in that, or taking a bet. But the other one is that sorry, I said, so that you need to be wealthy. You need to be smart to learn this stuff. You definitely don't. It's interesting though that the finance industry, it has a lot of jargon, it has a lot of complicated terms. It can feel overwhelming, and therefore there is an element of being like, oh my gosh, I need smart people to learn this stuff. And that's what we're trying to do at the Curve as well. Is why is something said like this? What does this acronym mean? Or can you break down this graph for me into everyday terms? And that's really, really resonated with our audience, because it's like, why does it have to be said in this way when it just means this? And everyone's like, oh my gosh, yeah. And so you instantly don't feel like, you feel smart when you understand that stuff. And it's like, oh, but it is like with any industry. If you're in the healthcare industry, there'd be jargon or there'd be complicated terms. If you were in the marketing industry, it's the same. But also when you're dealing with money, people tend to want to sound smart. So if you're at a party and you're talking to someone about their investments, they might want to sound really smart and know what they're talking about and use a whole lot of complicated terms or jargon that you're sitting there going, oh my gosh, I really don't know what they're talking about. And, it kind of comes back to that conversation of money equals power and control. And so they kind of want to sound smart. They know what they're doing. But trust me, probably 99% of those people don't then they're trying to come across more smart than they are. So, we're just trying to break down those barriers as well of like anyone can learn this stuff. You don't have to have a finance degree or, and you also don't need to know this much. You can still invest if you know this much. It's not a function of having to know everything and everything and anything. So, we're trying to break down those barriers as well.
And what's the, like, would you in that sense recommend financial advisors or, or for people, because at some point we can't, in a sense, or not that we can't, but some people might not choose to say, I want to learn all of this. I want to learn all of the jargon. I want to learn all of this. And I'll just trust and get a financial advisor. What, what would you say to that?
Yeah. Yeah, no, that's a good question. We do get a lot of people that are like, one end of the spectrum is I want to learn this and I want to do it myself. The other is like, I want to grow my wealth, but I want someone else to do it for me. And that's totally fine. Like there's no, I do a bit of both. I do some myself and then I give some away to other people to do. So it's totally fine, whatever your level of wanting to do it yourself is. I think the thing with financial advice is people kind of don't understand what it entails. You do have to have a bit of money to begin with to make it kind of worthwhile, because there is an added, I guess, human element of like hand holding or someone sitting down with you and creating a personalized portfolio. So there is an additional fee. So therefore, it does make sense to go down that route if you've got a larger sum of money. It's totally fine if you have a smaller sum and you want to do it, that's fine. But and I think there is ways, like fund management, which is investing in a fund, which means you buy one unit or one share of the fund and then it invests in a whole lot of companies for you. And there's different levels of there's kind of a more conservative fund, which is a bit more lower returning but lower risk. And then there's kind of higher growth, higher returning funds, that cater to a whole lot of people. And that's an element of hand holding or getting someone to do it for you, but you're still making that decision about which fund to invest in. And then the other end is, more, I want to pick stocks and I want to invest in what I want to invest in. I want to pick Microsoft. I want to pick Nike. I want to pick, I want to completely do it myself. And then there's also a time element. Some people think they want to do it themselves, but actually you don't have the time either to sit there and kind of do the research or monitor, their portfolios. So maybe they do, give some to financial advice and do some themselves. Honestly, I think if we surveyed our community, it would be a completely, different spectrum. But the key thing is that, you do pay an extra fee for that financial advice. And then, all the way down to the lowest fee is obviously if you did it yourself, but there are elements in between of kind of what you're happy with. So it depends. If you really don't want to do it yourself and want to get financial advice, then totally do it. I'd rather you did that than didn't do it at all. So it's kind of, there is financial advice for someone, and there's no harm in getting financial advice or getting someone to do it for you. Gosh, there's no judgment in that at all. Like it's whatever suits you. It's completely as long as you're growing your wealth, that's great.
I wanna touch on this, and this is something that we talked previously about, that is about what we are investing in and understanding I think that in my experience, most people have no idea what they're investing in terms of, what they would like, what their values are. And I I have talked a lot with, like people from Mindful Money and Pathfinder that are aiming to create spaces for understanding that and for understanding, here in New Zealand, what is your Kiwi saver investing in, and understanding, like ethical choices and things like that. Um, what, like, is that an added barrier in terms of the investment, or, or is that like, yes, let's choose really what we want, even if it potentially makes less money?
Yeah, I think it's definitely a big trend that we're seeing at the moment. And I hate calling it a trend because I don't think it's a trend. I think it's just a new way that everyone's going to be investing. But I think as Kiwis, there's an element of everyone kind of thinks that if I'm giving my money, my KiwiSaver money or whatever money to a fund manager or to someone to manage, they're going to manage it in line with my values or how I live my life. And there's an element of trust and an element of, kind of 100% pure New Zealand, they're going to invest in that way. And I think the great thing about Mindful Money is that they've just created a platform not just created, they have created an amazing platform that has really opened the eyes of a lot of New Zealanders into what their KiwiSaver is invested in. And I think there is a huge surprise by a lot of people that would have just assumed that their money wasn't invested in weapons, wasn't invested in oil and gas companies, wasn't invested in gambling. And so just to shine that light and create a space where people can go in and see where their money is absolutely amazing. And so you should be able to see what your money is invested in, and you should be able to make an active decision of, okay, yes, I'm happy with that. No, I'm not happy with that. Because at the end of the day, it's your money. And when you are investing in something, you're giving that company or that industry or whatever a tick of approval of, I want to invest in you and I want to see you grow and prosper. And I want to see you as a company, much bigger and be a part of my future and how I live my life. And so if you're giving that money to oil and gas companies or, fossil fuel companies or plastic manufacturers, you're saying, and some people want to invest that way. And then, I mean, it's not the way I would invest, but it's kind of, but you're giving that company a tick of approval of, here's my money to go and grow and keep doing what you're doing. And so it's really, really important to make sure that what you are investing in does align with your values and how you live your life and the companies that you want to support. And that's why Mindful Money is so great. I mean, we did a big campaign after the Ukraine-Russia war commenced, and it was all around, we used the Mindful Money platform, and it was all around, do you know if your KiwiSaver is investing in controversial weapons? And we stood outside the supermarket and we interviewed everyone around, asking them, do you realize what your KiwiSaver is invested in? And when we told people, I can't remember the exact figure, but it was like $100 and something billion of New Zealand money was invested in. Maybe it wasn't that high, I'm not sure. But anyway, it was a lot of money was invested in controversial weapons. And people were absolutely blown away that they couldn't even fathom that the fact that their KiwiSaver was invested in those companies. And it's just, it's kind of that naivety of everyone's like me, or everyone has the same values as me. And so really important to check that, because there was that saying, it's only one plastic straw fed 2 million people or something. And it's the same with your KiwiSaver. Oh, but it's only my KiwiSaver, or I don't even have that much money in my KiwiSaver. But if everyone has that mentality, then everyone's supporting the companies that they don't want to support. So it's really, really important. And I think also as females, we also need to kind of have that added level of looking at what we're investing in, because it's just part and parcel of the industry, is that it is managed. And it's not a hating on men club or anything, but it's that we're giving our money to men to manage, because they make up the majority of the finance industry at the moment. So naturally we're giving them our money to invest, our KiwiSaver money. And so they're making decisions on behalf of us. And so we as a gender need to make sure that, okay, are we happy with what they're investing in? Are we happy with those companies growing and prospering and being around when we're older, or when our children grow up, and so it's really important. And on the flip side as well, if you don't invest in companies because they're doing bad things to the planet or to society, then they're going to struggle to grow, because part of investing is giving money, giving equity, giving capital to a company to be able to make decisions about launching in a new market, launching a new product, buying another business to grow and be bigger and better. And so if a company is starved of that money, it doesn't really have those options to grow. So therefore, you naturally will see companies that you aren't supporting, do worse and worse and worse, and get smaller and have a lower impact on the environment and society. And the ones that are doing better will continue to grow and keep doing great things. So it's quite fascinating. People sometimes lose the realization of what investing actually is. They think it's investing in the stock market to get a return, to see my money grow. And it's actually a lot more than that when you pull it back. And so, but you were saying about that add another level of confusion for investors. And yes, it does. It's because there's companies out there that aren't doing good, but want to be seen to be doing good, which is what we call greenwashing. And we see this in products being marketed to us all the time. You might see, I think it was Coca-Cola bought out some stevia drink, and they had a green wrapper, and like it looks like natural, and you're instantly like, oh, but it's got a green wrapper, so that means it must be good for me, or things like that. And it's we get sucked into marketing, and so it's the same with companies. They're marketing themselves to investors, and so they will have big flashy presentations or annual reports or something with waterfalls in the background, or trees, or children playing, and it makes you think that they're doing a really good job at protecting or improving the planet or society. And some of them aren't. So it's really important to kind of look under the hood at what you're investing in, and it comes back to knowing what you're investing in. That's why if you're just blindly investing, you don't know if that company is actually what you want to invest in from a financial standpoint, but also from a non-financial standpoint. And that's why mindful money is actually really good, because it is overwhelming for everyday investors.
Definitely. It's I know, like we could talk about so much more. I'm just aware of our time, and I want to ask one more question that I think that it's really something that I would love to get your take on. But for everything else, like if you're listening to this, go and check out The Curve, like their podcast. There's so much more information there, and on the website, all of the courses. But the last question that I wanted to ask you was about money in relationships. We talked about it a little bit. Would you recommend? Of course, every relationship is different, but sharing accounts, having different accounts, what will feel, I mean, we're going to generalize, but a little bit more empowering and a little bit safer in terms of that? And how could having separate accounts actually could also have an impact on that relationship?
We actually just had a big conversation around prenups and kind of all the conversations that brings, all the awkward conversations. And but money in relationships is one thing that I've struggled with. And I'm the kind of person that, I don't want to talk about it, let's just brush under the rug and let's deal with it later. And I think it's starting a relationship, or even having such open communication in a relationship, even if it is uncomfortable, is so much more beneficial in the long run. You get to say what's important to you, they get to say what's important to them, and there's no right or wrong about how if it's separate accounts, if it's accounts together, it's whatever works for you. But it's all around having that conversation, having it early, and having it in a comfortable situation, not and we've got tips on our website around how best to approach these conversations, and we've got a podcast on it as well, is around you're putting time in, like, hey, can we talk about our finances, not bombarding them or catching them by surprise and then instantly defensive, or And creating a safe space. Don't trap them in the car on the way to work, or sit down, have a wine, have a cup of tea. Make it an enjoyable conversation, because for a lot of people it's not. And so the more relaxed and enjoyable you can make it, the easier it is. But we've had so many different situations. Some people, they put everything together. Some people are like, what, we have part of it out separately that we can spend money on what we want, and part of it we have together because we've got a mortgage, or we've got rent, or we've got kids. But it's totally up to you how you split or how you deal with your finances in a relationship. But one thing is so important, is just having financial clarity and having financial visibility on, if you're in a partnership, then that's, and money is one of the key reasons people get divorced or separate. And so if you can have that open comms from the beginning, it's just, again, it's going to also help with that financial stability. If you realize how much each other earns, or just the more you know about someone as well, the better. So it's kind of I think just having, it's just a communication element as well, and can really kind of break down that. And then you figure out what assets you have and how you want to. It leads into so many other conversations about, okay, well, what about when we have kids, or how are we gonna, if we get married, how are we gonna pay for the wedding? The earlier you can have those conversations, even if it's about how we're going to split rent, or if you can really not make it a big deal from the beginning, then that you'll be much better off longer term. But it's definitely, it's a hard one, because again, it comes back to what we're talking about. Like, some people may have seen their parents, every time they spoke about money, they argue. So they're like, I'm never talking to my partner about money. And so it's kind of creating that safe space and realizing that this doesn't have to be an interrogation. It can be a conversation, and it can lead to much better outcomes for both of us.
Beautiful. As I said, I could ask you like 2,000 more questions, but for everybody that is listening, can you share a little bit more about what's on the website? What are the courses that they can take part on?
Yes. So we have a great podcast called Raising the Curve, which is available on Spotify and Apple, or wherever you get your podcast. We also have a really good online course, which we run twice a year, which is 6 weeks long. And so you can sign up for the next kind of intake, which opens in September. We're doing the current one at the moment. You can sign up for that on our website. Also our Instagram, which is @thecurve, with 4 underscores on Instagram, and our website, it's thecurve.co.nz. Or if you do have any questions or anything, then you can email us at info@thecurve.co.nz.
Beautiful. Thank you so much, Vic, for sharing.
Thank you. Thanks for having me.
For doing what you're doing, because as you were saying, like, it does make an impact, and every little thing that we do, like, has a ripple effect. Like, if one woman, as you were saying, has that freedom or that security, and they share that with their kid or with their friends, then that just has a ripple effect. So awesome what you're doing, and thank you for taking the time to be here.
No, thank you for having me. It's been a really, really interesting conversation.
Cool. And for everybody that is listening, we would love to know what resonated with you. What did you learn, or what are you already doing? Like, leave us a comment anywhere that you're finding this podcast, and we will see you the next time. Bye.
Bye.
What did you like the most about this episode? Take a moment to think about what change you can make in your life today.
Share your conscious action on social media using #ConsciousAction and tagging @ConsciousActionNZ, so we can celebrate your impact on the world and create a ripple effect.
One easy action we would love for you to take right now is to share, like, and subscribe to this podcast. This will help us get these messages out into the world and inspire more people to take conscious action in their own lives, contributing to the better world we hope for.